Starting your own RIA? Betterment Advisor Solutions is the modern custodian built to support you from day one. With intuitive tech, portfolio management, and streamlined client onboarding, we make it easy to launch with confidence. Learn more at betterment.com/advisors. That's betterment.com/advisors. Grow your RIA your way. Investing involves risk, performance not guaranteed. Welcome to the WealthStack Podcast. I'm your host, Shannon Rosic, the director of WealthStack Content Solutions. Today, we're diving deep into the future of wealth management and challenging traditional approaches to financial planning. I have the pleasure of being joined by Jeff Coyle, founder and CEO of Libretto, a groundbreaking fintech platform that's really revolutionizing how advisors approach planning, portfolio management, and risk assessment. Jeff, welcome to the show.
Well, thank you for having me, Shannon.
Absolutely. So we're going from a video interview at T3. Now you're on the pod. Really appreciate you joining me on all digital media platforms. But I do want to start with your background. And I promise this is actually going to be the hardest question you'll get this entire conversation, because I want to know, and listeners want to know, what makes Jeff, well, Jeff, personally and professionally.
Oh, well, super. Yeah. I guess a little bit of a background. I've spent most of my career managing the wealth of the most affluent families. And then I built three advisory firms addressing those types of clients. I've also built three systems for managing complex wealth. And really, it was out of self-defense. They just didn't exist. And so we needed to build systems to be able to manage the complexity. As an example, the last system I built, a large private bank acquired it from me a little more than 10 years ago. I spent a couple years there as their deputy CIO as we institutionalized it across the firm, and now it runs their business. And Libretto is just fundamentally the next generation of advice, really. And that's what's really motivated us to bring this to the market.
All right. And now the personal side of things. You don't have to give away a ton, but, outside of being a serial entrepreneur, what else are you into?
I like a lot of water activities. I'm a sailor. I'm a surfer. I'm a kiteboarder. I ski. I snowboard. Those types of things. I enjoy reading. I like philosophy, and I like historical fictions. So I guess I have a diverse set of interests. I certainly keep myself busy.
I was going to say a bit of an adrenaline junkie like myself, but balance it out with some philosophical reading. I love it.
Yeah.
And from what I understand, Libretto has actually been around for about a decade now. And really, without a ton of flashy marketing, you've found a lot of success. So for listeners that aren't maybe as familiar, what is Libretto and what kind of solutions do you provide for financial service professionals?
Yeah. So first of all, I guess, we've been using the system for a bit more than 6 years. We just held it off the market for a couple of years as we built our learning center. So we released it a little more than 2 years ago. And really what Libretto does is we're really the next generation of planning and investment advice. And Libretto unifies personalized planning with a total wealth portfolio construction and then risk management. And as you might have noted from the background, our Libretto was initially built to manage the wealth of the most affluent families. But what's interesting is you can make a lot of mistakes when you're worth an awful lot of money. You can't afford to make mistakes when you're not. And so our mission is really to bring these methods to all clients. And we're having a lot of great success in doing just that.
Well, I guess there is truth to that statement, and more money, more problems then.
Yeah.
And Libretto has really positioned itself as a game changer within this wealth tech ecosystem. And what I find really interesting is that you've kind of reverse engineered your solution, since most financial planning tools are for the mass affluent, but you started with the ultra high net worth in mind and then focusing on the masses. Why was that your strategy?
Well, first of all, I guess practically it was out of self-defense. Systems really didn't exist and really don't exist to manage those kinds of complexities. So we had to build them ourselves. Having said that, the value of doing that is when you can solve a complex problem, you can address any problem. So you can take a system that's capable of managing complexity and apply it to less complex situations. But it's very difficult to do the reverse. It's very difficult to take a simple system and have it apply to more complex solutions. So really, in a sense, that's, in a sense, that's what we're trying to do, is take these more advanced methods and bring it to everybody. And we have a saying that we like to help advisors make every one of their clients feel like they're worth 100 million. And that's what we're up to, I guess, is to really bring more robust solutions to clients, and at the same time, help firms establish a differentiated competitive advantage in the marketplace.
Well, I appreciate the background and the context. So I want to dive into our first segment that I call Stats All Folks. And I know this is an area where Libretto really shines, is around that liability-driven investing. So I saw some recent industry data around LDI that said it was traditionally used by institutional investors. There's been a 15% increase in individual investors planning to allocate at least 10% of their portfolios to LDI style strategies this year compared to 2024. So I just want to unpack this concept of liability-driven investing, because again, that domain was really meant for pension funds, insurance companies, and those institutional investors. So why do you believe this approach has broader applications for now individual investors?
Oh, it's perfectly suited for individual investors. And first of all, it's not a product, by the way. It's actually a comprehensive solution. Mm-hmm. And so if you think about an insurance company, insurance companies have many exposures. Insurance companies are known for using liability matching methods. And the kinds of exposures they have, they write property and casualty policies, liability umbrellas, life and disability insurance, they're addressing corporate exposures. And their puzzle is really to think about how do they invest their capital to offset those risks in the business, so that they're not exposed in a stressful period. And that's the exact same puzzle that you think about when you're addressing a private client. And when you think about the liability methods themselves, here's a little puzzle as an example to think about it, is, let's say that we're going to go camping at a large river, and this river is known for periodically flooding. Where would you put your camp? Would you put it close to the water and risk that you get wiped out with the rising waters? Or would you put a long way from the water, and you're so far away from the water, you're not getting that experience? And so that's a fundamental problem. Now, the way that our industry traditionally approaches that puzzle is we would give people a risk questionnaire and ask them about their preference. And then once we understand their preference, we'll help them put their camp somewhere on that bank. And then we'll run a probability distribution to say, hey, this is the likelihood that you're going to get wiped out or not get wiped out. Now, the problem with that is just fundamentally missing the point of the problem. The problem is not the change in the water level, whether it's going up or down. It's rather how that water level changes in relationship to where your camp is. So as an example, in geek speak, that's the difference between variance and covariance. And so when you think about it, where would you put your camp? You wouldn't put it on the bank at all. You just put it on a boat.
Oh, okay.
And now it doesn't matter if that if that water rises or lowers, the boat floats right along with it. And what we just did is we just built a hedge. And when you build a hedge, you can endure pretty much what the world throws at you. And the biggest problem that we have as investors or households is the cost of funding our life. So when inflation hits the system and we own an intermediate nominal bond portfolio, what happens to the value of those bonds? Well, the value of the bonds go down at the very time the cost of funding our life is going up. That's a perfect asset liability mismatch. In order to address that problem, you merely match inflation protected bonds or the value of someone's Social Security, and now you built them a boat. And if inflation goes up, the cost of funding their life goes up along with the value of their assets. And that's when you have a hedge. And when you do that, you can endure pretty much anything.
That is a fantastic analogy. So I want to dig into something you mentioned around kind of risk tolerance and those questionnaires, because your platform actually offers an alternative to the traditional risk tolerance ecosystem. So can you just explain your approach to that life cycle planning and how it differs? Because how do you quantify risk tolerance differently without questionnaires or even a Monte Carlo simulation?
The first thing is it's an integrated process, really. And when you think about it, everybody to some degree has $10. It's their total wealth. And the first thing you want to identify is, well, how would you like to allocate that wealth? How much of that wealth would you dedicate to your personal lifestyle? What would you want to accomplish with your family? How would you like to affect society in some way? And what you're doing is you're identifying the purpose of your wealth. Now let's take each one of those individual outcomes that you're identifying and let's prioritize them. And the reason you want to do that is some of your outcomes or objectives, they're essential to you. And if they are, you want to minimize risk. Some are important, we can take some risk. And some are discretionary, we can take more risk. So what we're doing in just a planning conversation is we're helping a client to articulate not only the purpose of their wealth, but also the timing and characteristic risk suitability of literally every dollar they're going to spend. And then with that information, we can take every one of those dollars and we can match it with suitable asset allocations. And now we know how to invest every dollar. And because of that, we know how to invest every priority, every account, every entity. And that all rolls up to a household strategy. So what you have is you have a highly personalized solution, entirely driven by the life that they envision. And it's directly informed by the way that they think about the suitability of risk, not the preference of risk, but the suitability of risk for every dollar they spend.
So let's talk about the evolution of financial planning a little bit then, because traditional models have often just focused heavily on the investment portfolios, but you're really advocating for including elements like future earnings potential, Social Security benefits, things like that. So why do you believe this comprehensive view is so crucial for advisors to deliver better outcomes for their clients?
The first thing is when we think about what are we actually doing for clients? Are we managing a portfolio or are we managing a financial structure? And we argue strongly that we really need to be managing a financial structure. So when you build a solution for a client, you're going to actually build a total wealth strategy. And as you do that, Libretto actually helps advisors build a total wealth portfolio. So when they're building that portfolio, they're going to incorporate the client's homes, their mortgages. They'll incorporate their human capital. That's the present value of your future earnings. And for most wealth building families, it absolutely dominates their wealth. And yet they're completely unaware of it. And when you become aware of it, it changes the way you think about solutions. We also want to fold in their Social Security. For a typical retiring couple, the present value of their Social Security, it's worth somewhere between $1.25 million and $2 million. And what's interesting about Social Security is it's really an illiquid, inflation-protected bond, perfectly matched to the way they spend money. It's a hedge. And so what we want to do is we want to fold Social Security into the bond structure so we don't unintentionally overallocate to fixed income, which most people do. We do the same thing with pensions or annuities. As people start to work with more complex clients, they fold in operating businesses, properties, and other private assets. And at every level of wealth, you want to fold in expected estate inflows, insurance payoffs, transfer structures. So when you think about the liquid portfolio, it's not a standalone, let's say 60-40, the result of a risk questionnaire. It really behaves like a completion fund. It recognizes all of those other resources and then really fills in the voids to create a comprehensive solution. And this is how you can actually build truly comprehensive total wealth solutions tailored to a client.
Well, there's often a gap between what sophisticated planning tools can do and what clients can actually understand and not get the glazed donut look. So how does Libretto help advisors communicate those complex financial strategies in a way that resonates with them and ultimately and hopefully drives better decision-making?
Great question. I would say the first thing about this is these things are far more intuitive than a probability distribution or a Monte Carlo simulation. People actually understand what it means to protect their human capital with insurance, or to put a boat in place so that if inflation goes up, the value of their assets go up in the same amount. So the other side of this, though, is the system is actually designed to be entirely interactive. So people are having an interactive and empowering conversation with the client. And as they articulate the life that they envision, they're quite literally watching their portfolios being developed and then their risk management being applied. And so they actually fully understand their total wealth for the first time. Most people don't appreciate the value of their human capital, their social security, their estate inflows. They generally are unaware of the total value of their wealth. This is all very empowering. What's interesting about it is people often operate within a mindset of scarcity. They don't think they have enough. The more that you understand total wealth, most people are already financially successful. They just don't know it. So you're changing the framework from a framework of scarcity to a framework of abundance. And then we also have other types of tools. We have extensive reporting. We have personalized client letters. These are fabulous. And what they do is they're basically personalized white letters written from the advisor to the client, basically articulating their entire strategy using a narrative that the advisor would do in person. And so people get a lot of leverage out of these types of solutions.
And personalization is such a big factor today when it comes to financial planning. So what else is Libretto doing to support advisors when it comes to delivering that personalized advice?
I guess the first side of this is we spent a couple years building a learning center, and it took us a long time. It's very deep. And the idea behind the learning center is really to elevate the expertise of advisors so they can be that much more effective. And it's entirely discretionary. So people can go as deep or as shallow as they would like. And we also have recognizing communication is critical. We also have extensive library of white labeled communication materials. People can take PowerPoints and fold them into their branding immediately and start communicating effectively. We have an encyclopedia built into the system. So as an example, if you've never incorporated a private business into someone's strategy before, type in private business. It'll tell you exactly how to do that. And so the idea is it's both, it's training, it's deliverables, and it's resources. It's a systematic process of helping advisors to elevate their expertise and their communication abilities, and then make the experience working with clients that much more effective.
And you mentioned earlier in this conversation that you've spent a considerable amount of time managing wealth for affluent families. So what key lessons from that experience have you built into Libretto that you believe could benefit all investors, regardless of their net worth?
The first thing is what you realize is that people are all the same. We all have the same interests and fears. And what's different is about people with a lot of wealth. They can afford more, and they have a lot more complexity. But having said that, everybody is complex. When you start to think about your total wealth from your homes and your mortgage, your human capital, your social security, you have multiple kinds of risks. And so there's a lot of complexity there. And so what we've learned from working with the most affluent is we've learned to solve the most complicated problem. And then we can back into applying the same methods to everybody. And by doing that, we're able to bring the best methods to everyone. And that's very gratifying on our side of the puzzle.
So looking ahead then, what trends do you see shaping the future of wealth planning, and how is Libretto positioned to ultimately address them?
Well, at a really high level, I think as an industry, we need to replace simulation with personalization. And when you focus on personalization, you understand the client's total wealth. You're helping them to allocate that wealth across their personal lifestyle, their family, their social objectives. You're giving purpose to that wealth. You're designing personalized total wealth portfolios, incorporating everything. You're not missing that a mass affluent family has $2 million sitting in an inflation protected bond. If you miss that, by the way, you can be pretty sure your portfolio has very little relevance to your needs. And so what we're really doing here is we're delivering a family office experience. Now, by the way, that's just a fancy name for comprehensive wealth management that's well done. And so what we want to do is we just want to take these methods, apply them to everyone, and enable better solutions to be delivered.
All right. Because this is a tech podcast, I have to ask, because I love a good roadmap question. Are there any upcoming features or initiatives from Libretto that advisors should be excited about or coming down the pike in the next year or so?
Yeah, we have a lot of neat things coming. The personal strategy letters were a big hit. So we're getting an awful lot of great feedback from that. the same methods and tools that we're using to develop those, they're applied in so many other ways within the system. And ultimately, we're seeking how can we scale client deliverables to help advisors be more effective? How can we support them in the prospecting process so they're even more effective in the prospecting process as well? So we have a pretty nice development slate in front of us that we're looking forward to. And of course, we will be releasing those things as they come closer.
Fantastic. Well, Jeff, it is time for segment 2 of this episode that I call Ask Us Anything. So if you don't mind, I'm going to be putting you in the hot seat a little bit because I've gone out to the social universe and asked them to submit questions they want answered by you. And we certainly had a few folks slide into the DMs this week. So if you're ready, got a couple questions for you to put you on the spot.
Oh, certainly.
Love it. All right. First question we got. There's a common perception that liability-driven investing offers lower returns compared to riskier investments. How do you challenge this view?
Oh, it's absolutely not the case. Liability-driven investing is more personalized. It's not more risk adverse. And I'll give you 2 examples of that. And these are non-trivial. Let's say you take a typical mass affluent family. They have $2 million in a portfolio, but the present value of their Social Security is also worth $2 million. And you don't recognize that Social Security is an inflation protected bond. And if you don't recognize that, you can be pretty sure that portfolio is over allocated to fixed income. Now, when you take a typical family, many families are over allocated to fixed income because they're unaware of the role Social Security plays in their overall structure. If you compound that for 3 to 4 decades, the potential wealth differential is significant. Another relates more to the methodology itself. When you build a boat for a family, you build a hedge and you immunize their essential spending, it's a dollar value. So it may take $2 million to immunize someone's essential spending for the rest of their life. Let's say they're retired, as an example. Now, what's interesting about that, because it's a dollar value and let's say they have 35 years in front of them, it takes $2 million to immunize that. Well, what happens 10 years from now? They've lived 10 years and now they only have 25 years in front of them. Well, it takes a lot less fixed income because they have fewer years they need to protect. So what's actually happening in their strategy is their essential spending is always protected. They have a hedge in place. But the amount of fixed income is actually declining through time because they have fewer years they need to protect. Most traditional solutions would be doing exactly the opposite. They'd be increasing fixed income as people are getting older. And the reason for that, they're just unaware of these nuances that you are aware of when you're managing total wealth. Now, when you think about it, there's a lot of things that we can do as advisors, add value to our clients. But I can't think of too many other things that would have a greater effect on the potential lifetime wealth of a family than the difference between those 2 methods. Because if you compound for 3 to 4 decades on a declining fixed income portfolio versus an increasing one, the potential wealth differential is just off the charts.
Well, consider that view challenge then. Second question for you. This is kind of a large existential question a bit, but how do you see AI impacting your business?
We use AI in our systems. And it's pretty powerful. When you think about it, we know most everything about a client. We know their current resources, their future resources, their liabilities, all of their objectives, their risk preferences. We know all of these we know their wealth applications. And so and then we have very robust methods that's managing their total wealth and applying their risk management. When you have that much information and that much methodology being applied, AI is extraordinarily powerful. And so we're leveraging AI in our systems, and we have a lot of other interesting ideas around it as well.
So any advice then for advisors that are starting to dabble with it? Are they already behind if they're not using it? Or I always get that question too. And I know folks would love to hear from you, your perspective.
Oh, I think AI is going to be something. By the way, it's not without its risks, of course. And for us, we've learned how to use AI without the risk of the mistakes. And that's a non-trivial thing to figure out and understand. But I would say AI, yes. I mean, simple ones. Note takers is an example. But yeah, there are so many different places where I think AI can actually leverage and enhance the abilities of the advisor. And I think so to that extent, I would be aware of them and look for opportunities to actually leverage those tool sets.
Great. Well, certainly appreciate you being put on the spot, Jeff, and your insightful answers. But we have come to our final and my favorite segment that I call Stack It or Whack It. And yes, I have t-shirts to go with it. So I'm going to throw out a few technologies. Be warned, they're not always wealth tech related, especially if I know you. And basically you tell me if they are worth the hype or not. So stack it means use it, love it, whack it, hate it, lose it, no need for it. So if you're willing to go out on a limb with me, I have two for you. The first one, sentiment analysis algorithms that can scan social media and news to predict market movements. Do you think that's some type of cutting edge investment strategy or just another way to chase market noise? Stack or whack?
It's a today versus tomorrow kind of answer. I think I would, if I had a choice, if I had to pick one, I'd probably say whack. And the reason, and I would certainly apply skepticism as I was entering in that framework. The reason for that is it doesn't take long for the market to absorb any kind of an advantage. So if somebody has some kind of an algorithm that's capturing some kind of an advantage, it doesn't take long before everybody has that same tool set. And now all of a sudden that advantage no longer exists. So I would say probably whack it and approach it with a bit of caution and skepticism. And if it is valuable today, it might not be valuable tomorrow.
I think that's a great point. All right. Since we learned that you are an avid sailor, surfer, kiteboarder, then I have to ask, wearable wetsuit sensors that can measure wave height, water temperature, your body's biometrics while surfing or doing anything in the water. Do you think that's essential tech or unnecessary gadgetry? Stack or whack?
Oh, I would definitely whack that one. Surfing is both a soulful experience, but it also requires your entire focus. You don't need digital or gadgets. Actually, they would just be a distraction. And it would take away from just being in the environment itself. So I think on my side, I would probably whack that one.
I'd have to agree. When I'm deep into my hobbies, the last thing I want is even my phone. I just check out for those hours. Yeah. So I completely understand.
Yeah.
All right. 2 for 2 on wax. Love it. Jeff, this has been a great conversation. Thank you again for joining me. Tell our listeners where they can learn more about you and what you're working on at Libretto.
Oh, certainly. Probably the best place to find us is, and we've got a website at libretto.io. And so go to our website. If you'd like to set up a conversation, feel free to click the button and set up a conversation with us. We'd love to talk to you. We're also at multiple conferences. We'll be at NAPFA this week. And then we'll be at FPA NorCal at the end of May and Schwab Impact and others. So we'll look forward to meeting you at some time. Yeah, thank you.
Fantastic. And be sure to like and subscribe to the WealthStack podcast on all major podcasting platforms and follow all things WealthStack on WealthManagement.com, LinkedIn, and X. And if you want the in-person WealthStack experience, join me June 10th through 12th at the Boca Raton Resort in Florida for Wealth Management Edge. Thank you all for tuning in. Starting your own RIA? Betterment Advisor Solutions is the modern custodian built to support you from day one. With intuitive tech, portfolio management, and streamlined client onboarding, we make it easy to launch with confidence. Learn more at betterment.com/advisors. That's betterment.com/advisors. Grow your RIA your way. Investing involves risk, performance not guaranteed.